Welcome to the YouTube channel of Legally Trust. This video is one of the series of educational videos that will be available on this channel under the category General Awareness.
Hello friends, in today's video, let us understand the main equity markets and exchanges in India and how they are regulated. There are two main national stock exchanges in India. They are the Bombay Stock Exchange Limited, that is the BSE, and the National Stock Exchange of India Limited, that is the NSE. The laws, rules, regulations and guidelines relevant to the listing of securities on both the BSE and the NSE are significantly the same and are administered through the Securities Exchange Board of India, that is the SEBI, India's security market regulator. Both the BSE and the NSE have three trading markets each. They are the capital market dealing with trading in equity shares, the derivative market dealing with tradings in futures and options, and the debt market dealing with trading in debt securities. There is also a currency derivatives segment in the BSE and the NSE. The capital market segment for trading in the equity shares of companies is similar to the main market in exchanges elsewhere in the world. A small and medium-sized enterprise segment was introduced by the BSE and the NSE on 13th March 2012 and 31st August of 2012 respectively to facilitate the listing and trading of shares of small and medium-sized enterprises. Now let us understand about the Bombay Stock Exchange. It was established in 1875. The BSE is Asia's oldest stock exchange and the first stock exchange to be permanently recognized by the Government of India under the Securities Contract Regulations Act of 1956. The BSE is a demutualized corporate entity with a broad shareholder base that includes two leading global exchanges as strategic partners. They are the Deutsche Börse and Singapore Exchange. The BSE's equity index, S&P BSE Sensex, is India's most widely tracked stock market benchmark index. The BSE has lost some of its former preeminence and market share since the founding of the NSE, but due to its history as the only pan-Indian stock exchange, some of the advantages of listing on the BSE include media attention and visibility, liquidity, and heightened consumer awareness and confidence. Now let us understand about the National Stock Exchange. National Stock Exchange, India's first screen-based electronic trading platform, was established in 1992 by financial institutions and banks to provide nationwide online satellite-linked screen-based trading facilities to market makers, electronic clearing and settlement for securities including government securities, debentures, public sector bonds and units. Deliveries for trade executed on market are exchanged through the National Securities Clearing Corporation Limited. After recognition as a stock exchange under the Securities Contract Regulation Act in April 1993, National Stock Exchange commenced operations in the wholesale debt market segments in June 1994 and operations in the derivative segment in June 2000. The Nifty 50 index is the National Stock Exchange's benchmark stock market index for Indian equity markets with an ecosystem comprising exchange-traded funds onshore and offshore, exchange-traded futures and options in India as well as in abroad, other index funds and over-the-counter derivatives mostly offshore. The NSE was instrumental in creating the National Securities Depository Limited, which allows investors to securely hold and transfer their shares and bonds electronically. Some of the principal advantages of listing on the NSE include enhanced exit opportunities and liquidity, easier monitoring, faster decision-making, wider reach, and lesser fees as compared to other exchanges. Foreign companies can also list Indian rupee denominated Indian depository receipts, that is the IDR, on the stock exchanges. Now let us understand the main regulators and legislations that apply to the equity market and exchanges. The Indian capital markets are regulated and monitored primarily by the Securities and Exchange Board of India, that is the SEBI, Department of Economic Affairs, which is the Ministry of Finance, Ministry of Corporate Affairs, and the Reserve Bank of India. These regulators draft legislation and issue circulars, notifications, and guidelines to regulate the securities market in India and have power of oversight on various market participants. The stock exchanges also frame their own rules, regulations, and bylaws to regulate the market. The key statutes and regulations governing the equity securities market in India are the Companies Act of 2013 and the rules prescribed under it, the Securities and Exchange Board of India 1992, that is the SEBI Act, SEBI Issue of Capital and Disclosure Requirements Regulation of 2018, that is the ICDR regulations, Securities Contract Regulations Act and the rules prescribed under it, the SEBI Listing Obligations and Disclosure Requirements Regulations of 2015, that is the LODR regulations, SEBI Substantial Acquisitions of Shares and Takeovers Regulation 2011, Takeover of Regulations, SEBI Prohibition of Insider Trading Regulations of 2015, that is the Insider Trading Regulations, SEBI Prohibition of Fraudulent and Unfair Trade Practices Relating to Market Regulations 2013, that is the Unfair Trade Practices Regulations, and the Depositories Act of 1996. Hope this video was informative. Thank you for watching.
Hope the information contained in this video was useful to you. We look forward to each one of your support and cooperation in making this initiative a success. For more details about the trust, do visit us at www.legalaidtrust.in. Kindly subscribe this channel and click on the bell icon to get the latest updates about various law-related educational videos. Thank you for watching us and have a good day.